Alright, Assalamualaikum. This is the second video for this chapter. So this video will start on focus on the total. If the information that give the information that given by the question is like in RM total, not per unit. Okay, so we focus on this first. Okay, now we have two different type of question as you can see now. Certain question provide you the income statement, they have calculate, they have formatted for you. But in final exam question last semester, I only give you information, then you need to extract your own self this format of income statement. What's your sales, what's your variable cost, what's your fixed cost, is different with other question as you can see in document 2. It said, see, the question I provide you the details, you just use the number and substitute into the formula. So I only focus this for these videos. So we start with break EK. Calculate the break-even point in unit and RM. What is break-even point? Correct. The minimum amount of the quantity that we sell. So at least you can cover your cost. Total revenue equal to total cost. No profit, no loss. Good. Okay. Calculate the break-even point in unit and ringgit. So, okay. So this is a step. Don't worry, formula provided in final exam. I provide you break-even point. I will provide you DOL, DFL, DCL in exam. So you have no problem memorizing the formula. The important thing is how you use this formula. Alright, based on my experience, although I give formula in the exam, students still do same mistake. Don't create formula. Alright? Okay, total fixed cost. Which one, class? Correct. You see, 20,000. You have to use this or this, class? The brown color. Correct. I just want to test you because this is in RM. So we need to use this. Okay. So equals to your total fixed cost is 20,000. Okay. Divide by what is your total sales? You see, 160,000 and variable cost is 60,000. Very good. So simple. So you need to score my paper. Equals to, so can you all help me to calculate? All right, 20 million, sorry, 20,000 divide by 160,000 minus with 60,000, then you will get 0.2. Then your answer that you get here, okay, means that class 0.2 from the total production. Okay, so what is your total sales? So the answer that you get from this zero even stars 0.2, you need to times with total sales. What is your total sales? Yeah, you see, you just extract the information from the question, 160,000. So can I know what is the answer, class? All right, 0.2 times 160,000 is 32,000, class. You see? Great. This is RM 32,000. That's it. We have answered the question. We have answered question A. Now we go to the next question, B. Calculate the degree of operating leverage, degree of financial leverage, and degree of combined leverage for the company. So you have to use this formula. Or you have to use this. Perfect. You need to use this one. Why? Because this question is in total. Okay. Equals to, can I know your total sales? You see, class, it's so simple. Could I provide you the formula? You only calculate it because I provide you the income statement. But it's not a guarantee. I will not tell you which format that will be in the exam. Either you need to construct your own self, or question provide you already the income statement. You just calculate. So what is DOL? So degree of purchasing leverage, I repeat, to see the impact, the changes of sales towards EBIT. Sales towards EBIT. So it's 160,000 minus with what class? Variable cost. You see? Variable cost. This is 1. Then the question asks you to divide by what? The formula. Total sales is 160,000. Again, variable cost is 60,000. Can I know what is your fixed cost now? Oh yeah, it's 20,000. Correct? Simple class is really simple. So now you need to calculate. All right, use a calculator. So 100,000, 160,000 minus 60,000, you get your 100,000. Divide by, so come, this is 160 minus 60 is 100,000 minus 20, you get 80,000 class. Okay, equals to, alright, 100,000 divide by 80,000, then you get 1.25. I explained just now the answer. You need to explain. What I mean is, okay, I give an example. When sales increase by 1%, so EBIT. Why I use EBIT? Because DOL only measure sales and EBIT towards EBIT. So what is the changes? Do you think sales increase 1%, EBIT also increase 1%? No, because you have calculated the indicator here is this 1.25. So EBIT will increase. You said increase, EBIT will increase, but we don't know the amount of increment. That's why we need to calculate this DOL. EBIT will increase by, this is a way to calculate. Alright. This is the amount, what class? This is the amount of your sale just now. If the question, did your sale increase by 20, you use 20 here. Okay? Because now this example, I use only 1%, so you use 1%. Times with your DOL answer. What is your DOL answer just now, class? Correct. It is 1.25. So, with the question asks you sale and EBIT, you use DOL answer. Remember this? I'm using the formula of to find the changes of EBIT. Sale increase, how many percent? Times what? DOL or DFL or DCL. So now I'm talking about the sale and EBIT. So increase by using DOL answer. Okay? So equals to, so increase by what class? 1.25 times 1. Remember, don't change it to 0.01. Totally wrong. Okay? In the calculator, you take directly the number. If you're 20, use 20. No need to change the percentage. So 1 times 1.25. You get 1.25%. How about, okay, if the question asks you when sale increase by 5%. So how class? Correct. So EBIT will increase by, you use 5 here. But times with DOL. How to know why you use DOL? Because you are talking about sales and EBIT. So how to calculate now? Did I need to change 0.05? Yes, correct. No, because you only can take direct figure. 5 times 1.25. So this is the answer. So EBIT will increase 6.25. So you see class, when sales increase 5%, it's not necessarily EBIT will also increase 5%. You need to calculate DOL to know the amount of increment. So you can create the, okay, I allow you the explanation of this DOL answer. You can assume any figure. If you want to use 1, also can. If you want to use 5, also can. You can do your own assumption on this chapter, on this explanation of your answer. Right, do the same thing for DFL, but the DFL is between sale and correct EPS. Sorry, just want to test you. Sale and EPS is what? Sale and EPS is for DCL. DFL, EBIT and EPS. Good. Good, good. You're very good. I know my students clever. Okay, DFL is what? Use the same one. EBIT. Which one is EBIT? Earning before interest and tax. It's direct question, class. 80,000 divide by EBIT. Just follow the formula, class. 80,000 minus, can I know your interest? Is 10,000. You see? Direct question. Minus is what? Do you see any preferred dividend? No, right? So 0. Okay, why I put 0? Because 0 times tax, you will get 0, correct? So we can just 0, and then, alright class, you can try to calculate. 80,000 divide by 80 minus 10 is what, class? 70,000. Divide by 70,000, then you get 1.14. Is it correct? Can we check? 1.14. So how to explain your answer? You can use the same explanation, but what is the different, class? Perfect. You are very good. Alright, when now DFL is measure what? You want to see the impact on what? The changes of EBIT toward EPS. So for DFL, you are using EBIT and correct EPS. So you can assume if I want to use 1, you can use 1. Okay, I want to use 2%. So automatically it will be here 2%. But can I use DOL if I want to measure EBIT and EPS? No, no, no. You need to use DFL. So what is the answer of DFL now? So clearly stated is 1.14. Good. So come we calculate. 2 times 1.14. You get 2.28. Correct? 2.28%. Clear. How about actually the question? When EBIT decrease by 2%. When EBIT decrease by 2%, what happened? When EBIT decrease by 2%, EPS also decrease by 2.28%. Decrease and decrease, increase and decrease. Okay, next, DCL is about what? Alright, class, remember I told you that the answer from your DOL just now, 1.25 DOL, and your DFL, 1.14. You only times 1.25 times 1.14 equals to, so you can use your calculator, times 1.14. So you get 1.425. 1.425. So this is your DCL. Correct? You need to explain. So how is the explanation, class? Okay. It's between what to what? DCL, what we want to measure. Correct. Sales and EBIT or sale on EPS? Sales on EPS. You can assume any. Can you use 1.25? No, you need to use the DCL amount. DCL amount. Alright? Because you're calculating sales and EPS. No, you can see the impact. So what is the real answer? 5 times 1.425. You get 7.125. 7.125. So when sales increase 5%, your EPS will increase 7.125. Class, don't find in the question where is the 5. As I told you, this is assumption. If you want to change to be 1, also can. You can put as 1 as well. Okay? If you put 1 here, you need to put 1 here. So you will get your answer. 1.425. Correct? Percent. Please don't change it to decimal. Maintain with 1 in your calculator. So now we got, you see, we have calculate DOL, DFL, and DCL. Now we got extra question. The question asks is what? When sale increase 20%, you want to see either when sale increase 20%, what is the effect on EBIT and earnings? So two questions here. So okay, so first we calculate the sales increase by 20%. So now for this is for answer for the last one, alright? So sales increase 20%. So what happened to your EBIT? EBIT will, correct, increase and increase, will increase by, how to calculate? The question asks what? 20%, right? So use 20%. But now, which one you want to time? Either DOL or DFL or DCL? Correct. You see, sales and EBIT. You are talking about what now? Okay, correct. We are talking about DOL. So where is the answer of DOL? DOL is 1.25. This is our main, this is our indicator that we use. So, okay, equals to, come, increase by what, class? So it's simple. Can I change 0.2? No. Use 20 directly. 20 times with 1.25. You get? Oh, wow. So, you see, sale increase 20%. Your EBIT will increase up to 25%. Through this observation, you see that it's very good, correct? So your earning increase more than your sales increase. However, think, if your sale decrease, all right, decrease less 20%, your EBIT will decrease up to 25% of your earning. Is that good? No. Means that your earning before interest and tax, after minus your operation costs, they decrease extremely compared to sales. It's not good. So can I conclude this? High risk, high return. It is high risk. When your higher DOL and higher DFL is considered high risk. Because when in the situation of decreasing of sales, your EBIT will decrease more than your sales. However, if your sale increase 20%, your EBIT will increase more higher than your sales increase. So there is a higher return. High risk, high return. Okay, that is 25%. But the question asks you what? The effect on EBIT. Alright. Next, effect on EPS. Between what? Sales. Is it EBIT or sale now? The question provide you sales. If the question provide you EBIT and EPS, then you can use DFL. But now you are using perfect class. Now you are using DCL. Why DCL? Because the question provide you sales here. So automatic effect on EPS. But is it the same answer? No, class. Why? Because EPS use DCL answer. So your DCL answer is what? 1.425 equals to, okay, can I change to decimal? No, sir. Correct. 20 times 1.425. So you get 28.5%. Alright. So that's all on these videos. That this simple question, because they provide you the income statement, you just sub all this number to the formula. Remember, when you calculate DOL, this is not the amount increase. This is an indicator only. You need to calculate the amount increase by using this formula as I showed you just now. This one. Okay, class, if the question change, I want to add another question. I give an example. Okay. I change the question D. Using the same one. I'm using the same one for the question D. Okay. But I change it to EBIT. So how is it? What the effect on EPS? Okay. You can use the same explanation. However, now the new question give you sales or EBIT? The question give you EBIT. When the question give you EBIT, to see the impact towards what? The effect on your EPS. So automatically you have to use what? Perfect class. You need to use your DFL indicator. 1.14. So what is the formula? Sorry, I need to numlock. So 1.14. So the formula here is 1.14 times with 20. Correct? So your EPS will increase 22.8%. If the question you give a bit. Use the same formula. class, just want to inform you, this is not only sales, depends. If the question give you EBIT, then you use EBIT then. Okay, so most of the question they only use sales, but the question give you EBIT, use the same formula. The percent changes that the question give you, and then you time DOL, either DFL or DCL, depends on the question. That's all for today. Alright, for this video 2, I will continue to video 3, that I will answer final exam question. You see, they give only you information that you need to extract and construct your own income statement, as you see on my left side, and you need to compare and you need to choose which plan that you need to use based on DUL, DFL, DCL. As I told you, this DUL, DCL, and DFL to measure the risk of business risk and financial risk as well. Okay, so that's all for today's videos. Meet me again to the next lecture. Assalamualaikum.